to start off, can you just talk about your journey to going from Bitcoin is sort of interesting to this is sort of a legitimate investable asset? And then next, I'd want to talk about your sort of bullish take on it right now, which of course we share. But I'd like to understand that preliminary step.
Yeah, absolutely. So, I mean, I first heard of Bitcoin back in 2010, 2011, but I thought it was neat. I understood the basics of the technology, but I didn't really have a way to price it or a way to think that it would get very big. And so I didn't really go into that space. I didn't really kind of, keep too close tabs on it. But then, of course, when we had that giant run up in 2017, I started to get more and more emails from my investment clients asking me what my thoughts are on it. Do I think it's a good opportunity? And of course, there's nothing like price to change public sentiment on it. And so, for example, whatever is doing well at a time, I tend to get emails from clients about that particular thing. So we had the pot stock bubble, we had the gold stock, spike, we had Bitcoin go up, and all these different years kind of have a different theme. Right now, a lot of interest in electrical vehicle stocks, for example. But during that 2017 run up, I said, okay, I need to do a deeper dive on this. I need to have kind of a price model here. I need to understand some of the risks and opportunities. And so I did a long form kind of research piece on it. And so my conclusion at the time was that it is really interesting. It is really useful technology. And that I'm not exactly bearish on it, but that I can't bring myself to be bullish on it either. And so I kind of had that neutral to slightly bearish outlook on it. I took no position. And so I had a couple kind of key concerns at the time. One was that sure that Bitcoin is scarce, but that now that Satoshi Nakamoto published how to do it, all these other cryptocurrencies can come in its wake. And so my concern was that potentially that the market would become very diluted. So for example, even if $1 trillion of capital pours in, what if it just goes into all these different altcoins and there's no kind of one dominant network effect? The second concern I had was that Bitcoin had recently split, had the Bitcoin Cash hard fork. Because there was a difference of opinion among the developer community about whether to maximize, the ease of running a full node versus try to increase transaction throughput on the base layer. And so you had that kind of disagreement, and they went in two different directions. And so my concern at the time was, okay, we just had a massive price run up. I see some of these dilution risks, and so I sat out. That was around 7,000 a coin. And then, of course, we had the blow off top a couple months later. Then we had the big, the massive correction. We had this multi-year consolidation. And so it did actually underperform many other assets for a while. But then I started to pay attention to it again in late 2019 because by then, a lot of my initial concerns were addressed. So Bitcoin won out over its hard fork. In terms of hash rate and price, so it retained a very dominant market share. Some of those, that one of their hard forks, had another hard fork into Bitcoin Satoshi Vision, and those are less than 1% to 2% of Bitcoin's market capitalization and hash rate, and so they never really kind of became sizable competitors from a store of value perspective.
We call them shit coins. We're fine with that. We're not on the broadcast networks here.
Yeah, and so because they never took off, they never took Bitcoin's market share. Bitcoin regained some degree of Bitcoin dominance, meaning a percentage of market cap of the total, digital asset space. And so I started paying attention to it. And then, of course, when we had in early 2020, when we had that big liquidation event in March, where pretty much every asset class across the board was going down in price rapidly because we had liquidity issues in the global banking system, and so I saw that Bitcoin behaved a lot like gold and silver did. And so when it was started to come back up in April, I bought into Bitcoin. Ironically, it was roughly the same price. It was just under 7,000, that I analyzed it back in 2017. However, I viewed it as significantly de-risked, right? So it basically enforced its scarcity by making sure that some of these hard forks couldn't take market share from it. And it retained a lot of its key principles. And so, and then when you look forward about where it is in its 4-year halving cycle, it's in a much more favorable place, relative to the cycle that it goes through. And so I had a high conviction on that I wasn't sure it would take off, but I figured that the risk to reward ratio was some of the best I've seen in any asset class. So I had to have a position.
Like, you just take a moment and explain the halving. I think for some of our audience, that would be helpful.
Absolutely. So, the way Bitcoin is programmed, at roughly every 10 minutes, there's a new block added to the blockchain. And it does an automatic network difficulty adjustment to ensure that rate stays at about every 10 minutes. And after, I believe it's 210,000 blocks, which is roughly 4 years, there's a halving. So basically, every time there's a new block generated, a certain number of the miner that creates that block gets to create a number of Bitcoins for themselves. And so in the first 4 years, that was 50 Bitcoin generated per block. And then after 4 years, the algorithm is pre-programmed to cut that in half. And so that went down to 25 new Bitcoins per block. And then 4 years later, it was 12 and a half Bitcoins per block. And so every 4 years, the new supply of Bitcoin generated per unit of time gets cut in half. And so the pattern we tend to see is that, if you look at, what Bitcoin did in the launch cycle for the first year or so, it didn't even have a price history. And then it went up pretty dramatically. And then it had this blow off top, and then it reaches consolidation, and you finally had this kind of balance between supply and demand. And right when it got that balance, we had a supply shock, right? So the amount of supply got cut in half, demand was still pretty persistent, and that drove the price up again. And then, of course, you get momentum traders jump on board, you bring it up to a new high, you have another blow off top and a crash and a correction, and then it finds another equilibrium base at a higher price level, and right when it does that, there's another halving. And so the supply gets cut in half again, and it has another 4-year run. And so that's the cycle we've seen play out about 3 times.
Okay, that's great. So you had a terrific piece this summer, which I've sent to a lot of people, sort of the 3 reasons that you're bullish on Bitcoin. And you mentioned the halving cycle, sort of the network effect, which I think everyone's sort of familiar with, right? That's all the value that's been created in Google Information Network, right? Amazon, a retail network, has come from just this collection of people all on the same system. And then the third, obviously, is the macro environment. You're an economist. Can you just speak to that a little bit?
Yeah, so basically this 2020 was the perfect storm for Bitcoin, because in addition to being in a good place in its own halving cycle, and in addition to having won over some of those forked competitors, the macro environment couldn't be more attractive. The narrative for why you'd want to buy Bitcoin is some of the best around. And so, for example, we saw broad money supply in the United States increase by about 25% year over year over the past 12 months. And that's, of course, because we had very large fiscal deficits, and then we had a significant degree of monetization, where the central bank was basically forced to buy a significant percentage of the treasuries issued to do all this fiscal deficits. And so we see that in countries around the world to different degrees. So in many countries, you see money supply growth growing over 10% year over year. And the United States was actually one of the largest, with over 25% year-over-year money supply increase. And so when you have that kind of massive increase in money supply, if it doesn't show up in, say, price inflation, it can show up, more easily in asset price inflation. And so you've seen a reflation in, anything that's kind of scarce. So real estate, commodities, most equities, things like that.